John Higgins, Mortgage One. Happy Tuesday. I hope you had a wonderful Memorial Day weekend. Now we're back at it. So last week we did see that Kevin Warsh was confirmed as the new Fed chair. Be interesting to see what kind of influence he has. His take on how the Fed should work is a bit different than Chairman Powell. But one thing we kind of see for sure, we have a meeting coming up in a few weeks here in mid-June, and there's really no chance that there's going to be a change in interest rates. In fact, if anything, the bias now is shifted towards maybe a hike and not an ease from the FOMC. Inflation, as we know, since the start of the Iran war with higher gas and oil prices, has really started to push on inflation. So the market is actually, more, let's say, slanted towards an increase as the year goes on than a decrease as inflation has become somewhat unhooked and no longer getting towards that 2% target that the Fed kind of holds as their main line. So a couple numbers I thought were interesting. We see about a third of all home sellers are cutting asking prices in April. That's a bit of an improvement over last month, but you can see that homes that are priced appropriately are moving. The ones that are overpriced, certainly sellers are coming down on that price. That also shows up in newly built homes. So our new construction, we haven't seen home prices like this since 2021. So again, showing that the market is maybe reaching a bit more equilibrium between buyer and sellers. That's good news for affordability, and certainly on the buy side, it's been very difficult for buyers to get a home under contract as we start to see more signs that the market is maybe not softening so much as getting back to equilibrium. I did find it interesting that nearly 1 in 8 sales do fall apart. So when a property goes under contract, we saw in April, 47,000 contracts were canceled. So we do see all kinds of reasons why contracts fall apart. And I found that quite interesting that 1 in 8 don't actually make it to closing. Term of the day, only because Chairman Warsh is coming in. What is the Fed funds rate? Well, it's the key monetary policy tool that the Federal Reserve has, basically trying to influence liquidity and guide economic stability. So we look at the Fed funds rate as kind of a guide which way interest rates are moving. So if the Fed is cutting, usually that means that the 10-year Treasury and for us, mortgage interest rates are going lower. Doesn't always work that way, but pretty close. We're going to be in a holding pattern here for a bit. Don't look for the Fed funds rate to change anytime soon. Where does that leave our 10-year Treasury? Well, coming off some really ugly numbers, we got up close to 4.75% in the last week. We're below 4.5% as we open the week on some good geopolitical news. Maybe the ceasefire could turn into a deal. There's been a little bit of action in the Iran war this morning, but interest rates are kind of holding at that 4.5 level. We're well off the 4% number we saw on February 27th. Before the bombs started dropping. But if we could stay below 450, that would be great. And then maybe try if we get some kind of deal over there to get back below 420. But it's going to be a little bit of a slog to get there, I think. Where does that leave our mortgage rates? Well, we're up week over week. We're above 6.5% on Freddie Mac's market survey. So affordability is still an issue. Not any good news here other than if what's coming out of Washington and maybe Tehran, a deal maybe in the offing soon. We'll keep our fingers crossed there. If there is an agreement reached, I would expect that interest rates would come down. That would help the oil market. And certainly if we can get the oil flowing out of the Persian Gulf, that'd be a huge improvement in inflation numbers, I think, as we go forward. Remember, I do have that Move to Marketing Studio available for all of my realtor partners. Would love to help you grow your business in 2026. We get your listings on TV. We do all kinds of creative marketing for you. Really, I believe that a loan officer and a realtor working together can get further ahead than working alone. I'd love to chat with you about this. We'll talk to you next week.